What is up, everyone? My name is David, and today I'm going to share some of the things that I wish someone had told me when I was 18 years old and I started the stock market. Let's get to this, and these are going to be the tips and tricks that I've learned throughout the years. These really have changed the way that I've traded. I started in the stock market when I was 18 years old. I have a bunch of articles on me if you want to go ahead and read them. They're long. If you want them, go and do it. You learn a lot about me. But basically, just to sum it up, I'm a businessman. I've traded stocks since I was 18 years old. I've managed to flip 10,000 to 800 and so on and so forth. And I've helped my friends make over $1 million. And most of that was this year alone, especially after the crash that happened earlier this year. Well, let's get to this. I hope you're taking notes because this is going to be really impactful for your trading career. Tip number 1. Buy stocks you are confident in. This is a very important thing. If you're not confident in a stock, don't buy it. And basically, I'm going to go ahead and give you examples of these. Don't buy something that someone's telling you to buy. You need to be confident. I'm not saying these people are wrong, but if everyone's saying go ahead and buy into Tesla and you know Tesla isn't something that you're into, don't go into it. Don't touch stocks you don't understand. For example, if you don't know anything about the pharmaceutical sector, then try learning a little bit about it before going in first. You don't want to lose money, so be careful about how you invest. And this is a beginner's guide, so you need to be adapting to these fundamentals. For example, I might say, hey, look, buy Tesla. I have a gut feeling that, oh, Tesla's going to do so good, but that's not what you might think. You need to be confident in your own self. Self-confidence is the key to success, and that is in anything, and especially in stocks. Because it is your money at the end of the day. It's not my money. It might be your parents' money, but it's not your friend's money. It's your money. You've earned it. You've worked for it. So you need to be very careful about it. And you might be saying, Naveed, my guts are giving me these different vibes all the time. If your guts are giving you these vibes, then there are probably two things that are going on. Either number one, you have really bad diarrhea, or you actually just need confidence boost. These both things can be fixed. So don't even worry about that. These come with over time. And especially as an investor, you're going to learn this and you're going to adapt to it and you're going to start growing with it. Number 2, and this is a very important thing. This is called doing your research. If you haven't done your research, then you're not investing. You're actually gambling. And you don't want to be doing that, especially in the stock market. What's the point? You're not going to be gaining any money. You're going to be losing. I mean, if you're lucky, you're going to gain something. I can't stress this enough. It's extremely important to do your research. There are a lot of things that go into picking a successful stock. This also piggybacks off of the confidence thing. If you're not confident in your pick, then you're not doing your research correctly or you're not doing enough research. Because the confidence should come as you do your research. It should be a given. If you're a person that loves the pharmaceutical sector, especially as a new investor, you've heard, oh, the pharmaceutical sectors are going to make me a lot of money. They can, yes, they can make you a shit ton of money, but you need to be looking at the right websites. For example, I use Biopharma Catalyst. It's a website that goes ahead and shows you the catalyst for these pharmaceutical companies. Right now, we're in the coronavirus category. We're in like that little bubble of coronavirus stocks. These stocks have a tendency to skyrocket. They have catalysts. They have vaccines. These companies have catalysts coming up. And catalyst basically means events. Events meaning they might have a phase 1 trial, results coming up next week or the week after that. This is what that means. And the second one I use is called TradingView. This is really good for a new investor. If you're using TradingView, it does have a 20-minute delay. Before, it never used to have that. I don't know what they did, why they did it, but now it has a 20-minute delay. Basically on TradingView, you can see the stocks that are trending at that morning, that time. You can get a little glimpse and do your little own research. It's really good for beginners, basically. And for the most part, you can do your research through the brokers that you're using. As a new investor, you're probably using either TD Ameritrade, Merrill Edge, Robinhood, or Webull. For me, I have an account with literally every broker. I have balance with ranging from $1 to a few $100,000. So for me, I'm really confident with using whatever I really want to use. So I can use most of the things out there very comfortably. And for you as a new investor, you're probably not that confident. So you need to pick the one app that everyone's using or one app that you really like, and you need to stick to it because that app might help you with your trading career. Number 3, pick the right brokerage. If you're new to stocks, this is a very key component into your success. If you started investing, you're probably using Robinhood or Webull. And if you haven't started yet, I really recommend using Webull because it gives you a lot more power in your hands because you can get more research out of that. I also like using Webull because it doesn't crash like Robinhood. When I say this, I really genuinely mean this. You want an app that helps you learn and gives you stuff without you going out there and actually digging for it too much. So it's a really good thing to have an app that really gives you everything. Like for example, Webull, it has a bunch of trading things inside of it that you can do your research. You can find the SEC filings. You can find the financials. You can find all the fun stuff. You can literally do your research in the palm of your hands. And some of these brokers are really complicated. For example, Merrill Edge, that is a really complicated app. I love Merrill Edge. That was my very first brokers that I used. There were not many videos out there, so I actually had to learn by myself, being on the phone call with these people for maybe 3-4 hours a day. And I actually had to learn from them. So you got to pick something that really is comfortable for you. Okay, number 4, this is going to help you a lot, especially if you're a new investor. Buy into stocks over time. As a new investor, you might have a tendency to go all in. Oh, you may be like, oh my God, this stock is at a cheaper price. I'm going to go all in right now. You don't want to do that. You want to go in over time. That stock, you might buy it at $10 and it might have a habit of dropping down $2. So you buy in. And there's a thing called averaging down and averaging up. If a stock is $10 and you buy it at $8, you're going to start averaging down if you keep buying it at a lower price. So your average price altogether is going to be probably $8.50, $9 or something like that, depending on how many stocks you're buying. So it actually helps you at the end of the day. And when I say invest over time, I'm going to give you 2 examples like the one I just gave you, plus I'm going to give you a bonus one, which is basically, if you have $2,000 and you want to go all in the market, I suggest you don't do that. Especially in the market that we're in right now, you want to go in slightly but surely in a really peaceful manner. You don't want to go all in. You don't want to be violent with it. No, you don't want to do that. What you do is you get that $2,000, you put 25% up first, and then you go wait a couple days, see how the market is, and then put more money in, and then wait a couple days and see how the market is and put more money in. This has 2 benefits. It prevents you from losing a lot of money, plus it helps you gather gains and it gives you a good insight about where the market is going. The last thing you want to do as a new investor is buy in at a higher price in the market. Let's say the market is booming and you buy in at the really peak and the next day it just crashes. You're going to lose a lot of money. You don't want to do that, especially as a new investor. And this strategy works in the overall market. If you're getting a paycheck every single Friday, then go in slightly and still invest. If you can't invest $100 one day, that's fine. Go ahead and put $10 up every single week whenever you get that big paycheck. Put $10 up and put it in the market and see how your money grows. Play with it, learn it, and you will be successful. Okay, number 5, don't buy into penny stocks too early on, especially if you're a new investor. I can't stress this enough. Like the rule of thumb is if it isn't on the New York Stock Exchange or if it isn't on NASDAQ or AMEX, then don't buy it because it's considered an OTC, over-the-counter stock. It's considered a pink sheet stock. If you watch Wolf of Wall Street, you know what this is. So you need to be very careful about what you get into, especially a penny stock because it's considered really risky. That's why it's called over-the-counter. That's why it's called a pink sheet stock. It's really risky. Be conservative with your money. Maybe get the fundamentals down first and then get into those types of stocks because you'll save yourself from a lot of headache. Number 6, the final one. And this, I promise you, you will not regret if you implement this the right way. And this for any investor, even newer ones and even older ones. You need to be in control of your emotion. It is very important to be disciplined, especially in the stock market. You need to know it is okay to see a 2% drop. It's okay to see a 5% drop and it's okay to see a 10% drop. It's not the end of the world. You don't want to panic sell. That's the last thing you want. If you panic sell, you're probably going to end up losing more money than you would have if you just held it on for another day, if you've just done your research a little more. So don't panic sell. Also, take a break from your phone, especially if you're a new investor. I promise you, you're going to get addicted. You're probably going to pull up your phone every 2 minutes trying to look at the market. Don't do that. Just leave it alone. Focus on your daily lives. Don't let the stock market consume you because it will drive you crazy. There have been times, and especially as an investor that teaches people, that people see a smaller drop and they start freaking out and they think it's the end of the world. You don't want to be that person. I promise you, you will miss out on potential gains. You will probably lose a lot more money than you would have if you just had been patient. It is important to be very disciplined in this area and this field. Don't let the stock market consume you. And that's my word of advice, especially in the emotions category of number 6. And well, if you like these tips, go ahead and follow me. Go ahead and subscribe to my YouTube channel. I'm going to start making more videos like this, and I hope these videos help you guys a lot, especially as a new investor. These I know are crucial times. I'm going to be posting more videos about business. I'm going to be posting more about entrepreneurship, motivation, and just stocks in general. And I'm going to be putting watch lists on my Instagram. Go ahead and follow me on Instagram. Watch list every week, every Monday on my story, because I know how important this is, especially when the elections just happened with Biden winning. I know that there are going to be a bunch of catalysts that are going to be on the way. These are going to be crucial times for you to get prepared. You have time from now until January, because January there might be a crash and you want to be prepared for that. So it's very important. Stay tuned because I'm going to be posting more.